The stock market has been experiencing ups and downs, which is usually the case, but it's been particularly turbulent in the electric vehicle industry as new events keep unfolding in the world. Experts keep making new predictions, and funds keep changing stances on which companies will come out on top after the storm passes and the future unfolds. Since the success of a fund is highly dependent on the companies it bets on, what happens when one of the biggest funds trades a large portion of a fund for another? It's highly indicative of the fund's stance and belief in these companies. One of the largest funds just bought Tesla and sold GM stock. What is the implication of this? Why did this occur? We'll be uncovering all of this in today's video. Tesla and General Motors, amongst others, are fighting for dominance in the electric vehicle market. Each understands the other isn't going to surrender an inch in the battle of the wallets of customers. Meanwhile, investors are arbitrating the battle, deciding whether to bet on one or the other based on the two car titans' development objectives and market positioning. Tesla, whose market valuation is currently over $837 billion, is one step ahead in this case. That's 12 times GM's $68.9 billion market worth. Tesla has acquired a new trust mark from the Canada Pension Plan Investment Board, a Canadian pension fund. Founded in 1997 by the Canada Pension Plan Investment Board Act, the Canada Pension Plan Investment Board, sometimes known as CPP Investments, is a crown organization tasked with overseeing and investing the funds contributed and held by the Canada Pension Plan. In the fourth quarter of 2021, Canada's largest public pension doubled its stock in Tesla while reducing its holdings in General Motors. According to a Securities and Exchange Commission filing, Canada Pension Plan Investment Board had 483,016 Tesla shares as of December 31st, up from 368,706 on October 31st. The total value of that stake was recently estimated to be $418.3 million. On the other hand, according to the same statement addressed by the Securities and Exchange Commission, Canada Pension Plan Investment Board sold 4.23 million GM shares at the same time and still retained 548,346 as of December 31st. The entire value of this holding is approximately $25.6 million. The pension plan also sold off some other substantial blocks of shares in addition to these automobile moves. The Canada Pension Plan Investment Board also sold 173,237 shares of General Electric and 1.4 million shares of NVIDIA. It seems they're fortifying the fund and reassessing the companies within their fund. The decision to sell off General Motors shares is quite intriguing, especially given that GM is in the midst of a big electrification effort. However, it appears that the Canada Pension Plan Investment Board had had enough of waiting for a return and desired to switch to Tesla, which makes sense in terms of their brand values and recent events. Tesla and other electric vehicle manufacturers' stocks have skyrocketed as petrol prices have risen to a national average of $3.61, according to AAA.com. On February 28, 2022, Tesla was up 7.9%, reaching a high of $885.67 for the day. As some investors cashed in on their gains, Tesla shares slipped slightly at market closing, losing about 7% on the day. Rivian increased by about 7.2%, whereas NIO increased by 10%. While General Motors has a plan to dominate the electric vehicle industry, it's clear that this occurrence would take longer than they projected. Meanwhile, Tesla has been an industry leader in electric vehicles almost since its inception as a public business in 2012. Elon Musk, the company's dynamic leader, is one of the most well-known entrepreneurs of all time, ranking alongside Henry Ford and John DeLorean. We take this move by the Canada Pension Plan Investment Board to mean that they're betting on Tesla. However, many experts are still bearish on Tesla. One analyst notably stated, although significant price appreciation is possible and likely in the future, the likelihood that it would mirror what has happened in the past is quite doubtful. As a result, expectations should be moderated, implying that Tesla had peaked and its past performance would be its all-time high. Other experts would beg to differ though. After being at neutral since July 2020, Daewoo's Nathan upgraded Tesla to outperform. Nathan believes that the company's competitive advantage over traditional internal combustion engine rivals is strengthened by fresh supply chain worries and mixed with increasing oil costs. This is important to note because while General Motors is trying to switch primarily to electric vehicles, the majority of their profit still comes from internal combustion engine vehicles. In a note to clients, Nathan wrote, Tesla's capacity to ship out of cost-effective China and history of better handling chip shortages in 2021 could boost its competitive position under the present Russia-Ukraine crisis. At the same time, increasing oil costs and the possibility of fuel shortages, particularly in Europe, could hasten the transition to electric vehicles. Investors appear to be betting that the US and European governments will take steps to expedite EV incentives and adoption in order to minimize reliance on foreign oil as a result of Russia's invasion of Ukraine. The White House delivered a statement on the eve of President Joe Biden's State of the Union speech on February 28, describing his clean energy programs and investments. In addition to this, we believe the Canada Pension Plan Investment Board also made this move in alignment with their net zero by 2050 pledge. The fund, which administers $550 billion in assets on the behalf of Canadians, announced recently that it'll be working towards achieving zero emissions by 2050 in accordance with worldwide standards laid out by the Paris Climate Agreement. This isn't the first Canadian pension to aim for net zero, but it's the biggest and the only one whose investment operations affect everyone in the country. Net zero pledges have already been made by the Ontario Teachers Pension Plan, Caisse de dépôt et placement du Québec, Ontario Municipal Employees Retirement System, and Investment Management Corp of Ontario. The United States wasn't left out of this pledge, of course, as the Biden administration also set goals to achieve a 50% electric vehicle sales share by 2030 and create an official target to achieve net zero greenhouse gas emissions by 2050 in the first 2 months of 2022, with the goal of reducing greenhouse gas pollution by more than 50% by 2030. In a bid to stay relevant, companies are always trying to keep up with the times. So of course, General Motors also made a statement saying that by 2035, it intends to phase out gasoline-powered cars and trucks in favor of electric vehicles that emit no emissions at all. In a recent interview, Mary Barra, the General Motors CEO, stated, "We believe in climate change. It's true. As a result, we are aware that transportation has a significant impact." According to Barra, consumer demand for electric vehicles, including a Hummer that can travel 350 miles on a single charge, is expected. She added, "We're seeing it grow, and I believe that we're approaching a tipping point where consumers are much more likely to embrace an all-electric vehicle because they recognize the benefits." This is great news for the environment, but the automotive brand still has a long way to go on the electric vehicle front. With respect to General Motors, the Canadian fund's choice between the two automakers has an air of disapproval. That's especially true given that it comes as the Detroit automaker led by CEO Mary Barra redoubles its attempts to bridge the gap with Tesla. Meanwhile, continuous crude oil futures fell by 0.9% to $91.94 on Friday, after trading above $100 a barrel for the first time since July 2014 in intraday trade recently. As uncertainty about new car supplies and fuel prices impact on demand, Nathan of Diowa said the accompanying drop in profit contribution from internal combustion engine vehicles may hold down investments into electric vehicle expansion that Tesla's competitors are targeting. With capacity increase in China and the United States, he feels Tesla is ideally positioned to meet higher electric vehicle demand in this climate. In light of recent events, Canada Pension Plan Investment Board wasn't the only fund to buy Tesla shares. According to their regular quarterly disclosures filed with the Securities and Exchange Commission, Vanguard and BlackRock Incorporated have also grown their investments in Tesla. Vanguard boosted their Tesla holdings from $61.9 million on October 31st to $62.4 million on December 31st. As of December 31st, BlackRock had 52.8 million Tesla shares, which is 1.42% of the company's capital. Longtime Tesla bull Cathie Wood of ARK Invest also recently bought Tesla shares. She also stated that she isn't buying into the current surge of conventional automakers like Ford and General Motors. The stock price of General Motors rose when the company introduced an electrified version of its best-selling pickup truck, the Silverado. Wood said, "Think about it, they surged on those electric vehicle announcements," noting that electric vehicle sales account for only 2% of traditional automaker sales, with the remainder being driven by gas-powered vehicles. Wood believes Tesla and electric-forward automakers are better buys than traditional automakers, and that a business like Ford or General Motors could report a surprise loss this year due to greater investment on electric vehicles and lower demand for gas-powered vehicles. Putting that into consideration, it makes sense that the Canada Pension Plan Investment Board would pull out of what could be a failing bet and invest in what they believe is a more rewarding investment. The fund stated, "Our investment-only mandate assures that we focus entirely on optimizing returns while limiting undue risk in order to help build a retirement foundation for 20 million Canadians." Why do you think the Canada Pension Plan Investment Board bought more Tesla shares and sold General Motors stocks? Comment down below.